Dipan, hi, good morning. Touch wood, 2 days of a rebound. How sustainable is it looking right now?
Keep your fingers crossed. Keep your fingers crossed. If there was to be a retracement, a turnaround, a correction, it generally starts like this. And then it should gather momentum and it should be trying to build on these gains. But one should keep a lookout for what the news flow is and of course the oil prices. And if those kind of settle down, I think the markets can gradually make a recovery. But look, I've been in this situation many times, and it's very difficult to call when the bottom is formed and when is the right time to buy and when the recovery will take place. It's just that only a few weeks after it is over and done with, you come to know. And more importantly, I think from a signal point of view, so far we've been seeing lower bottoms and lower tops, and that has to change to higher bottoms, higher tops before you can conclude that the worst is over and that the markets will build on these gains.
Dipan, this Aurobindo Pharma, these observations that have come in, Form 483, you believe that's material? It's not new for Aurobindo and therefore cause of concern?
The thing with Aurobindo and a lot of the large cap pharma companies is now the manufacturing base is very highly diversified. And this risk has been around for a long time. 4 years ago, it was intense. But now I think, if they have a problem, most of the products are manufactured out of more than one particular unit. And if that gets impacted, then they start supply from the other one. And even remedial measures are faster than before. So I don't think it's much of a cause for concern. I think more Aurobindo is driven more by good quarterly numbers, overall improvement in sentiment for pharma, considering that it's a safe bet within in such tumultuous times. At the same time, rupee depreciation benefits Aurobindo Pharma, and there's a huge opportunity in weight loss drugs, which the entire Indian pharma company is going to take huge advantage of. So these are the factors which are driving Aurobindo Pharma, and they've been quite, I would say, conservative when it comes to their capital allocation. They have, divested of large businesses which didn't make sense to them, and acquisition strategy also is far more conservative and sound.
Dipan, hi, morning. How do you look at some of the auto companies? Initial numbers are showing there's some slowdown coming in on the retail side for the PV makers.
I think that's to be expected as the base effect catches up, and these kind of volumes are not really sustainable. But nonetheless, I think they're great long-term buys, especially companies which have got a very sound strategy and a very strong competitive moat or a brand. Our preference for companies like Mahindra and Mahindra, which has a very sound EV strategy, very exciting range of products, and has clearly been a huge market share gainer. And then there is Eicher Motors, another favorite of ours. Both companies we and our clients have invested, and it's part of our model portfolio as well. So Eicher Motors also, I think, I would say that one of the top auto companies, great prospects to generate growth through exports. And although there is competition, they've been able to sustain and increase their market share. Overall, their segment in the two-wheeler industry is gradually growing and limited threat from EVs as well. So I would go for Eicher Motors and M&M. Although I do feel that commercial vehicle manufacturers, especially Ashok Leyland and Tata Motors, their prospects also are looking up. And we may see a nice upswing in the entire industry. So I would keep an eye out for these two companies as well.
There's Tata Steel as well, which is going to be in focus this morning. They've approved the merger of Neelachal Ispat Nigam with Tata Steel. There is Shree Cement as well. They've been declared the preferred bidder for the limestone block in Andhra Pradesh. So that's another stock which is also in focus. And a bunch of other names like an SBI as well, which has managed to raise about 6,051 odd crore rupees through the issuance of the 10-year Basel III compliant Tier 2 bonds. This urban company where an SBI mutual fund has bought a 4% stake. Remember, yesterday the lock-in period got lifted and you had that huge block deal as well take place in the urban company. So a bunch of these names we're going to be keeping on our radar this morning as well. Yesterday, of course, while it was metals through and through, and even the broader market contenders like a SAIL and Nalco, they all held out well. Other than that, of course, there was MCX, which held out very, very smartly. That stock shot up about 4.25%. Premier Energies is one name which has been climbing up quite a fair bit. Another 2.5% of a move coming in yesterday as well. And then Blue Star, their entire white goods and the summer play clearly is in effect. And that stock as well was up about almost 1.25% or so. The other, of course, was Lodha. While it did see a fair amount of OI build up, but the stock did languish after a very, very choppy ride. Kunal, you were talking about the prospects of DLF, and that's a buy call, interestingly so. But what about the other realty majors, your Keystone, Lodha, etc., or even a Prestige for that matter, and Godrej Properties?
Yeah, so I think Prestige is the other name which is also looking attractive. So it could be a synchronized move across the real estate stocks, which could happen. Multiple things which trigger this kind of move. One is the divergence of these stocks from their mean, from their major means for themselves. When you have a point where there's a 20-25% divergence for these stocks, then eventually these divergences, they cool off or they come back for the stock prices. That generally happens when the market mood becomes a little bit more better and there is a slight appetite of taking risk from trader perspective. So I think that's one trigger which we generally need to watch out for. The second, the more important part is that real estate stocks, they generally move in tandem. And, we've not seen a point where just one stock or the entire pack, it tends to outperform. So this generally happens when you see a strong, maybe a zone where there is news flow, which is positive, for the entire sector. So I think we probably might enter into a phase where there could be a wave of short covering, which could be there for these real estate pack stocks, as well as a point where the divergence is very steep and that risk appetite is slightly coming back. So two sectors, something which you pointed out, metals also made a very strong comeback yesterday. When you see 2 or 3 major sectors which are considered to be high beta, when they make a comeback in a scenario like yesterday, it generally tells you that the markets have got that slight better risk appetite which is there. And in that scenario, it's possible that these stocks can continue to do very well for themselves in the short term.
And realty index has been one of the worst performing this year so far. So do you think the revival coming in many of the stocks?
So there is this very interesting stat which is there that for 2 consecutive years, if a sector underperforms, so remains in the, so there are 11 or 14 sectors which are there, and amongst the those sectors, if there's one sector which consecutively appears for the worst performing sector for 2 years, it tends to be in the top 3 in the next year. So, and we've seen that happening. So, for example, there was a point where CPAC index underperformed for 2020-21, and then that sector managed to be one of the best performing sectors. Realty was one of the worst performing sectors. I think 2023 or 24, it became the best performing sector. There was a move of almost 70% or 80% for the sector. So it tends to happen. There's this interesting stat. Last year was negative for realty. I think if I'm not wrong, it was the second worst performing sector out of the entire pack. And this year, the start again is on the negative side. So there is a chance that these stocks and the sectors could be at a very good value zone. I'm not saying that for the entire year they would continue to be negative, but the risk reward now starts to be a little bit more better.
Do you see this kind of a rebound for IT also?
So this is the first year where you've seen the IT stocks underperform by that kind of a magnitude.
Okay.
So I'm not sure whether it extends to maybe another year or so, but yeah.
Dipan, fundamentally, if you look at real estate stocks, do you think that the market is now looking at the cash flows from the business rather than the kind of announcement of pre-sales, which was the reason many of them were running up?
See, first of all, I think the kind of disclosures coming from the real estate industry are very positive, and their focus is on sales, is on realization, and that also is very positive. They are like truly consumer companies now, and less of like hedge funds, which kind of hoard land and hope to sell it at a higher and higher price. So that's one really positive aspect for real estate companies. Secondly, I do believe that we are in a long multi-year, maybe even a decade-long upcycle in real estate industry. Right now, we could be hitting a soft pocket because last 2-3 years have been very good. But nonetheless, I think the momentum should pick up sooner rather than later. And last but not the least, what we really appreciate is that all of these real estate companies, quarter after quarter, they are adding new projects and building value, creating value within the company as well. So I'd be very positive on these companies. Preferences for companies like, say, a DLF or a Prestige, which also have annuity revenues coming from the kind of buildings which they have given on rent. And then there are also these office rental companies which are quite interesting because the commercial side is where the supply is really tight. Companies like WeWork, a recent listing, I think they were great expansion plans. And also there is Office, which is another company which is into shared commercial premises. So I would look at those companies. And yes, Phoenix Mills also, which is there on the screen. another interesting company, a play on real estate as well as malls.
Okay. Let me in fact go across to Meryl. She's got that second set of stocks on our radar this morning because of corporate announcements. Meryl, what do you have on your list?
Well, yes, here's some stocks that we're going to be watching in today's trade. First of all, SBI is in focus today after the banks raised about 6,051 crores through the issuance of 10-year Basel III compliant Tier 2 bonds, strengthening the bank's capital base. Alongside this, continuing to remain in focus will be Jaiprakash Associates after the company saw negative sentiment yesterday, and this is going to lead to a complete cancellation of existing share capital and an eventual delisting of the company from stock exchanges. So we might see the stock again in focus today. Also in focus will be Urban Company after SBI Mutual Funds picked up about 4% of a stake here, seen as positive endorsement coming from institutional investors. So we might see some action on this front as well. In the tech space, Hexaware Technologies has launched Agentverse, which is an enterprise AI platform, and they're claiming this could boost productivity from around 40 to 60% and lead to significantly faster response timelines. But moving on, we've got Kirloskar Industries also in focus after its material subsidiaries temporarily halted production at one of its two high-pressure molding lines due to the ongoing LNG supply disruption that we've been seeing. Also in focus will be CESC after the company's issued 4 letters of awards for the supply of 600 megawatts worth of renewable energy in a power purchase agreement signed for a term of 25 years. Finally, also going to be in focus is Shri Renuka Sugars after they've announced a major change in leadership effective from the 1st April 2026. Mr. Sushil Kumar Kamboj will be taking over as MD and CEO of the company in place of Mr. Atul Chaturvedi, who will be moving on to a non-executive director role. So yes, that was a quick list of stocks that we're going to be seeing in focus today.
Thank you so much for that, Meryl. Let me, in fact, quickly take one question with Dipan. Dipan, give us your view, your take with regard to Varun Beverages and this acquisition which they've made. It's more in the dairy space and health foods, or rather that category. Are you positive, bullish with regard to a Varun Beverages? Obviously, Pepsi continues to grow. I'm not so sure whether that really impacts, or everything that's happening geopolitically really impacts demand on that front.
So first, a disclosure that we are invested in Varun Beverages. And more than all these acquisitions, I think what is going to drive Varun Beverages is a very, very hot summer. I think we're looking at a super El Nino. That is what I read from a lot of the kind of experts who are tracking the weather and climate patterns. So it's going to be a very hot summer, and Varun Beverages benefits from that. Last year was a washout because of untimely rains and not so hot summer. So I'm very positive from that point of view. Valuation is reasonable, and if they're able to get the African businesses going and bring them to the kind of efficiency and productivity level which they have achieved in the Indian market, then that could also be a great source of growth for the company as well. They're getting into even alcohol beverages. They have recently tied up, if I'm not mistaken, with one of the US beer brands to try and explore selling beer in Africa as well. And they've changed the objects also to include the selling of alcohol beverages. So it's interesting. I think it's a very aggressive management. And as I said, I think they keep on looking for opportunities. But the real kicker in Varun Beverages is going to be volume growth, which was tepid last year, which should do very well this year because of a very warm summer.
Okay. Talking about, consumption.
Extremely disappointed with the company. And, they managed even the kind of NPA crisis, which was there in the banking industry, that they managed very poorly. Top management has really disappointed the shareholders. Great value destroyer, I would say, over the long period of time, considering the opportunity. And as such, we've written off the company completely. I think just too much of controversy every now and then. And unless there's a change of ownership, change of management, and complete revamp, I wouldn't look at this company again. In any case, I think our view on banks is very circumspect. The banking industry is quickly becoming a red ocean, and I'm not sure that the industry will be able to sustain these kind of net interest margins in the medium to long term.
Okay. And, would you... So you wouldn't dip your toe in PSUs or private? Is that the way you look at it?
The way to play the lending business is, in my opinion, through the NBFCs. And we have seen good correction in multi-product NBFCs. Usual disclosure, we and our clients are invested. Companies like Bajaj Finance, L&T Finance, Cholamandalam. I think they're the ones I think which should be preferred over the banks. I'm sure PSU banks are cheap, they are attractive. So if you want an allocation to banks, I would still go with the banks like maybe an SBI, even tier 2 banks like Union Bank, Bank of India, Bank of Baroda. What is to be avoided, in my opinion, is the large private sector banks. Their growth rates have I think, secularly declined, and now they are growing at or below the overall industry growth rates. And as I said, I think the industry has become extremely competitive. There was a time when PSU banks were in slumber and they were grappling with NPAs and not expanding their balance sheet. Now that has changed completely, and there are a whole host of new fintech companies, and the entire savings are also going more and more towards the capital market. So I think banks on a medium to long term are going to be quite stretched and strained. So I'd be a bit, as I said, careful over there. But it's a very big industry. 37% of Nifty's weightage is in the bank, which in itself is a risk factor because such high weightages cannot be sustained over a long period of time. So I don't know how it's going to actually play out, but I'm not looking at being overweight on the entire banking sector. And in my opinion, the better way would be through the NBFCs.
Okay. Pritesh, let me come to you. What's the view with regard to markets right now? What is your opinion? Where do we go from here?
First of all, now see, yes, on immediate basis, the 3-year mean has provided some sort of respite for the index. But again, I'm not so keen for markets, to staging a big up move from here on. See, market is going to take its time. Against the EM space, we have been a big underperformer, and I think it's going to continue. At this point of time, I would like to look at the relative strength. So, where it lies right now, we talk about our markets. So when we look at something like the Nifty GS Composite Index, USD INR, or even something like gold, all these asset classes, they are currently outperforming Nifty. So in this kind of scenario, it tells us that money is flowing away from equities. So if this kind of setup continues, on a relative strength chart, so it would be difficult for markets to, provide that follow-through move on the upside. Yes, it has provided respite, but I'm not so keen for it to participate for a long period of time. We can see this moment continuing. 23,800 could come into play later on. But again, I'm a bit circumspect of this rally. In fact, I'm more interested in how the top 10 index on the Nifty 50 index, how they participate, because they carry around 55-60% weight of the index. And so far, I think the banks are the one in last couple of days, they have showed some respite, but nothing beyond that.
Pritesh, how do you look at some of these auto companies at this point in time? We briefly spoke about the PV makers, but what about the two-wheeler makers, the Bajaj, TVS, Hero Moto, and Eicher?
So see, Nifty Auto Index, when you look at the relative strength of auto versus Nifty, it has come off the peak, but the structure is intact. So in this kind of scenario, it can take a bit of time. But rather than four-wheeler space, and two-wheeler looks interesting. From the two-wheeler basket, something like Eicher Motors looks very interesting. The stock, if you look at this particular count rate, that does not correct for a long period of time. In fact, when I look at the point-of-figure structure, it consolidates time at the top. Post a bullish anchor column. We don't see a big follow through downside. In fact, this keeps on moving higher. This is a strong structure we're talking about. So the way I look into it, when I look at Eicher versus the auto index, it is showing strength. It is showing outperformance. On the standard chart also, I'm expecting move towards 8,500 levels.
Okay. Dipan, what's your view with regard to auto?
So we discussed earlier in the show that we are very positive on the auto industry, but you should expect a slowdown in the volumes because base effect also will catch up. Two companies come to mind which we have a preference on. One is Eicher Motors and M&M. Usual disclosure, we and our clients are invested, and also quite positive on commercial vehicle manufacturing companies like Ashok Leyland and Tata Motors. I think in the commercial vehicle, which is cyclical in nature, We are looking at a nice, decent upcycle within that particular segment. But I think investors should remain overweight auto, but they should reduce their return expectations because these kind of growth rates are not sustainable. Also, there are some headwinds coming to auto industry in terms of higher input prices, so that could be a cause for concern a quarter or two down the line. So there are certain issues. I mean, at the same time, due to the correction, the valuations also are attractive. Long term, I don't see much of a challenge. Short term, I think there could be some compression of growth rates or in profit margins for that matter.
When you spoke about CV makers, they're increasing the prices from April 1. Do you think that there is enough demand momentum to absorb this kind of price increase, which is on the back of raw material and crude prices, which is going up?
1 to 2% is not much. I think it's the CV cycle works more on replacement. It works on overall transportation demand. It works on the overall economy. And if there's more infrastructure, more construction, more manufacturing, if demand is good and freight rates are strong, then of EVs, then commercial vehicles tend to do well. And now there's a nice kind of a consolidation within the industry. Both companies, Tata Motors and Ashok Leyland, are looking at export markets quite seriously as well. And from time to time, they do get a regulatory push because of a lot of the older trucks, need to be kind of junked so as to keep pollution levels also under control. So, but these are all long-term plays end of the day, and I think 2-3 years, these companies should give superior returns.
Okay. All right. So, that's the way Dipan's looking. Clearly positive with regard to auto. Kunal, let me come to you. Some of the metal counters, they've done well yesterday in trade. A Tata Steel, a Nalco, for example, is a trade that's played out very, very well. Can that continue to play out, or should one book profit at this point of time?
So trading wise, I think they can continue to play out over the near term, because it looks like that major part of the pain for the metal stocks could be behind us. And now the risk reward is starting to look a little bit more better for these names. You're looking at a point where Tata Steel, I think, has recently formed a support or a low around the 185 to 190 zone. Nalco, I think, on the recent charts, I think made a low of 365, 370. And from there, the stock has seen a bounce back. Hindalco also, I think, sub 900 mark is where the stock, just close to that 900 level is where the stock made a near-term swing low. So many of these stocks, they've corrected by 10%, some of them by 15% over the last few weeks. And that makes the setup a little bit more better for the metal counters. The only catch over here is that the market sentiment has to be a little bit more on the stabler side for the indices. We saw that happening the last 2 days. And even if we expect, say, over the next couple of days, if the market sentiment remains stable, the range for the index narrows down on the intraday basis. That would give room for these metal counters and those slight high beta pockets to start to at least show signs of some outperformance.
Rupee opens at 90 to 42. That's almost at par with what it closed yesterday. So there's some stability on rupee as we speak. But Dipan, if you can also take us through some of the other sectors, especially with respect to metals and non-ferrous, for that being Vedanta or for that matter Hindalco. How do you see these two counters?
Yeah, I think that we have seen a nice rally in metal companies, and rupee depreciation benefits them. At the same time, they are expanding capacities as well, both these companies. Vedanta, of course, gradually concerns around debt at the holding company have dissipated. But look, these companies have rallied significantly. They are in focus. I suspect investors are overweight these companies. So the strategy would be that if you have an investment in these companies, then remain invested. But from a fresh investment perspective, I would wait for a down cycle. And right now, I think a lot of aluminium, copper, steel prices are at a high, and these companies should report great numbers. And that could be a bit of a trading rally over there. But it's like, I would feel that I don't expect the outperformance to continue for a significantly longer period of time. So from that point of view, I would be a bit careful in these companies.
Okay. Let's switch focus. India's ceramic hub, Morbi, is staring at a massive... Firstly, okay, Dipan, I understand I need to let you go. So thank you so much for coming in, giving us that perspective. But switching focus to the ceramic hub, Morbi, it's staring at a massive shutdown with nearly 50% of the units already